Okay, so let's go through the answer to this strategy 2 trade. So the chart is the one showing now. We've obviously got a downtrend here, so can you find the trade? Well, here is a trade. It's an A, B, C, D here. Where are we going to be entering? Well, for a strategy 2 trade, we are going to be entering at the D point. I've just moved it lower just so it's on the grid line, so you can read the price for the currency unit question. What about the stop? Well, the stop goes above the previous pivot high. But as you can see, the previous pivot high is way too high. So we will put the stop 50% of C to D above the entry price. And again, we've moved that so it's on the grid line, so you can read the price for the currency units question. What about the break even? Well, again, the break even is at the 1-to-1 risk reward. So obviously when the actual entry and the actual stop are placed in the right place, we would have the same distance between the entry and the stop and the same distance between the entry and the break even. So when price moves down to this price here, we will move our stop from the original place down to the entry price. So how many currency units will you trade here? We know it's a GBP against US dollar trade, $20,000 account, 3% risk. Entry here, 1.8735, stop 1.8842. So how many currency units will you trade? Let's go through to the trade size calculator. So $20,000 account, 3% risk, currency is GBP against US dollar. Entry price is 1.8735. Stop price is 1.8842. And when I click calculate, we have 56,075 currency units. So for this trade, you will trade 56,075 currency units. So where would you exit? Well, we exit by looking at the pivot highs that form after the break-even price. So the first pivot high that forms is this one down here. And so we would move the stop down to above this pivot high. The next one that forms as we go along is this one here. So we would move our stop lower to this high. And then we see that price spikes up and stops us out when price breaks the pivot high that we had our stop above. So we would exit here. We would buy back our position at a profit. Our risk reward? Well, if you look at the distance between the entry and the stop and the distance between the entry and the exit, we have a risk reward of around about 3-to-1. Now remember, we're talking about where the entry should be and where the stop should be in order to get the right risk reward. So that was that strategy 2 trade. Let's move on to the next example. So just go over to the next page and we'll discuss another trade.